weekend all. Ira Epstein with your weekend edition of your financial market wrap-up, and this is for Friday, April 3rd, 2020. What a week it was. Volatility way over the top. You know that we're all going to be looking Sunday night to see how the COVID-19 cases come in. I understand New Jersey's a hot spot now. New York's a hot spot. They're getting ready in Florida. I know it's quite bad down there. I have friends there. They're telling me what's going on as everybody's just getting ready. The good news is eventually we peak. If you watched in Wuhan, they've opened up the vendor stores again. So the vendors are back on the street. Life is getting back to somewhat normal. People are wearing masks. They're practicing what they have to practice, and the government's certainly looking at them. But as we look at the markets behind us, should not be a surprise. You go into the weekend with gold getting a bid, the dollar getting a bid, the stock market down, no surprise there. Bonds and notes getting a bid in them. Okay, now in the energy sector, pretty wild because we're going to walk into an April 6th, that's Monday, meeting between OPEC Plus. I don't know if the U.S. is going to take part in it or not, but what I'm looking at from the U.S. is the April 13th meeting of the Texas Regulatory Commission, that they decide, are they going to let the oil people just keep pumping as they are, or they're going to pull it back. They are the first OPEC. I don't know if you realize that, but we will see what goes on there. But oil up, what, 40% off its lows? A dramatic move. When we take a look at the financials on the weekly edition, we start off with one monthly chart and then we go to the rest of them weekly. And the reason we do it that way is we're trying to get the bigger picture. When you look at this monthly chart and you look at how the market has come down, it's only, and we are only at the 3rd of April, and for this month we're already down 87 points, as you can see. When we go to a weekly charts, we can see how you came straight on down in this market, and I'm talking the S&P. We got as low as, we can look at it here, 224.75. We got a bounce then, and now we're back down, if you will, to 24.8270. The question is the market going to go for these lows? That's what a lot of traders will be looking at. Is the market going to go back through last week or come down? And this is a close only, so we're not dealing here with the highs and lows. We're dealing with the close as to how these markets are. When we come to a weekly bar chart, now we get a different picture, because you can see how the market came from all the way up here and just came humming right on down. It doesn't seem like it, but just shy of what, 2.5 months ago, we were at all-time highs and people were talking about the multiples on the S&P, and we were getting concerned, are they high at 20 or 21? Nah, this is a new world, we can go even higher. It isn't a new world. The market found another reason to give a correction. There always is a reason, whatever they turn out to be. It's Spanish flu, there's different things that happen. In any case, the trend is down on the weekly chart. You have a pattern of a high and then a lower high. You certainly have a low and then a lower low, and this is just a bounce. When I take a look as to where the market's at, on this rally, this is the 200-week moving average of closes. So to see the market attempt to come back up here and struggle with that should not be of a surprise. If you cleared it for whatever reason, then you have the next layer of resistance at the 100, and after that, up to the 18-week average of closes. So you've got plenty of layers there. Now, what I do like what the market tried to do, it got to 24.8270 on the close, which is above the lower Bollinger Band. Only 5% of the time will a market statistically be outside of the lower or upper part of a Bollinger Band. So when you get there, you're a bit excessive. By just moving back one time over it, you start the process all over if it's going to get back down. But this typically acts as something of a support. It's not uncommon for bearish markets, instead of you get the plunge like that, to then convert themselves and start running with the band. That would not be a surprise to me. Momentum on the weekly chart, I don't look at to see if the market gets overbought or oversold. The momentum's either neutral, pointing up, or pointing down. I'll call this having gone sideways just recently. You can see what's happened, and that sort of fits in with last week's rally in the market and this week going just hanging around, not doing an awful lot. When we come to the NASDAQ, it too was able to get back inside the Bollinger Bands. That's good news. Now the question is the market going to ride it? Momentum here also skirted sideways. Take a look at this gray line. That's your 200-week moving average of closes. The market tried to hold that, got its bounce back up, and ran into resistance at the 100-week average. Trend down, bias down, momentum flattening, but could easily flip on us either way. In the Dow, this market broke out, as you know, and we went to the downside with lower highs, lower lows. Here, too, is a market that instead of pointing straight down, the momentum skirted sideways. We got back up after this voracious break and got into the Bollinger Band again. So the one thing the indices have done, as a statistician, somebody that watches charts and so on, I look at this and I say to myself, okay, that takes off some pressure. The market's not excessive. I know you're going to say, what's he talking about? Look at that break. But I'm just, as a chartist, that's how it is. If it rallies, I'll look at the 200-week moving average of closes. If that's broken, then the 100 and then the 18. I don't see anything on this chart to turn it up on a near-term basis. In the Russell, this has been the weakest of the indices, but it also has one of the more interesting patterns. If this market gets over 1180.30 and the market is down to 1053, that's quite a ways off, but if it did, that would negate this pattern that the markets currently have of lower highs and lower lows. Unlike the other indices, it's still pointing down in momentum. You can see where the number is that I don't want to hit, and this is called getting to the Bollinger Band, and now this is the pattern of starting to ride it. It's still a very bearish pattern, but I have a number now that I know that would scare me as a chartist and say, hey, maybe this market's overdone itself at this point. In the VIX cash, all that we did is pull back inside in this market in the Bollinger Bands. We had been staying, as you can see, outside of them 4 weeks in a row. It's rare to get beyond the 5-week. What I do is I count how many successive days you're over or under a Bollinger Band. When you're over it, I count each successive week in this case, or in days, as one of those 5 percentage points. And certainly you can go beyond it, but you'll see more times than not you don't. So I gave the market coming in this week no more than a 1% chance that it was going to stay outside of the band. I was looking for a pullback. I've got it. It's not a trend changer. You still have higher lows and higher highs. Also, learn to look at this. When you get momentum that loses itself in terms of lost momentum, it just tightened up all the way here. When you eventually break out, don't be surprised if the market just takes off on you. Now, you can get false breakouts. You had one right here just before the real breakout happened, but you do pay attention. Learn to do that. In the 10-year note, again, this is a market that is riding the Bollinger Band. You can see it. On this one correction week, it began the pattern of then coming to it. Now you're just riding that band, momentum up, trend up. So this chart happens to look more bullish for the 10-year than the daily charts. Resistance back at the all-time high on this market. Remember, it's an inversion market of 140.22.5. The dollar index pulled back inside the Bollinger Bands. That's where it belongs. Is there a trend? Not yet. And I know you're going to say, what's he say? No trend. This is a higher high. That is a lower low. What we've had is a vertical move first from here straight down, then a monster pop, and then a pullback. This is not little bitty stuff. These are dramatic moves the market's been making. I've traded currency since their inception, and I am telling you, you don't see moves like this. This is very, very unusual. And I don't see a trend yet on the weekly chart. Daily chart's a little bit different. As we come over to the Eurocurrency has had a pattern of lower lows, but it's got a higher high. We need this week to set up and tell us what it's going to do. The market's been running into trouble just recently at the 18-week average. We had hit twice. The lower Bollinger Band popped back inside and ran into resistance right there. Canadian dollar still running the lower Bollinger Band to the downside. You can see how that's all going right through there. This is bearish action. Now, the part that counters it is momentum has started to go sideways. The market pulled into the Bollinger Bands. Over here, it was out of it. And markets, when they crash or they take off vertical on you, they can get out of the bands. But when they're getting more normal, whatever that word means in markets like this, they get inside of those bands. This is still a downtrend market, and it stays that way unless you take out 71.88.5. in the Japanese yen. On the weekly chart, you have higher lows, higher highs. The support in the market is the 18-week average to the 100. You'd break the pattern if you get under 89.97. Not taking that out, puts you with the resistance point here at 94.29. Bitcoin, while the daily charts were bullish, this isn't. This is weak, still weekly. And its weekly is bearish. Lower highs, lower lows, as you can see, this low to that low. The market's now fighting at the 100-week average. The pattern here, there's nothing on this pattern that I see just yet, unless you had an outside week up that could look bullish on this chart. Let's get to the next one. Here we are, the Brent crude. Now for a differential between the two, you've taken off to a new high level. We haven't done this in a while. The market is now back over. First, if you take a look at the settlement, 577, you're over the 18-week average. This is just a differential of closing prices on a weekly basis, but that favors the Brent over the U.S. Here's the Brent, and you can see what it did. This is a dramatic week. For the week, you're up 36.82%. So this market certainly has all the makings of a market that looks like a bottom, but I am going to warn you, momentum hasn't yet turned up. It's just staying here sort of flat. The trend is still down. This is a heck of a bounce. We'll see where the market ends up here. I have not turned like so many traders bullish. As a technician, throw the name off the chart. There's nothing bullish on that chart just yet. WTI is different. WTI had a big reversal week, and that changes this. You have here lower highs. That's why the down arrow, and suddenly a higher, if you will, you got a lower low. So this took out that high. You don't have the pattern anymore. Now you're neutral on this. Momentum is down, bias down, but you've lost the bearish swing line on this chart. Gasoline pulled back into the lower Bollinger Band. It's not left its bear pattern. You still have a market with lower highs, lower lows. And I realize the press is bullish and all that. That's not bullish. You can get a bounce. I'm not arguing that, but there's nothing here bullish. If you think a bull trend has got to have just a bounce back into the Bollinger Band, no, you've still got the lower highs, lower lows. So you put it all together, you try to come up with a game plan as to where you're at, and that's what we try to do. Each morning, and I use the word each morning, I start you off, and this is 5:40 in the morning. I do a recording where I'm going to cover for you the technical analysis that's going on from Europe through Asia. Actually, it's Asia, Europe, then to us. Then I'm going to give you an idea about what I see in the technical part. I should have said the fundamentals first, then the technical. And I'm going to give you exact points of entry, exit, stop orders, longer-term objectives, what I'm seeing in the marketplace. From there, the idea is to give you confidence in your own trading. I am not going to be the person that's on the phone with you necessarily. I do talk to people, but this is about teaching people, giving them the idea before the futures markets really get going in the morning. It is a video. It's about 20 minutes long. It covers all the areas you just saw. If you haven't tried it, it's $7.95 for the first 30 days. If you don't like it, you don't renew the subscription. It's that simple. You like it, you can either go for another 30 days, no contract with us, for $15 per 30, or you can buy a one-year subscription. You do pay that one up front, and that equates to $13 a month. It's not even a tick in most of the markets. Think about what I'm saying. To find out about it and how it all works, go to www.iraepstein.com. Research, you'll see what this is all about. With that, I'm Ira Epstein. You have a great day, and I will talk to you all come Monday.